Now, calling it cost recovery can be a little confusing. You're not getting your money back. So if I buy $100,000 of worth of assets such as cars, PP&E, you're not getting that money back. But this concept, right, it is recovering the cost of your investment through expenses and tax deductions. That's what we're dealing with here. Cost recovery, it's a tax concept that allows businesses and individuals to recover the cost of certain assets over time rather than in one lump sum. Now, we think about, what do you want in taxes? You want high deductions, you want losses, right? Even though in reality, you don't want to spend the money, you don't want losses. Those are good for tax purposes. But the IRS is not going to let you take a full deduction for, let's say, buying PP&E, buying a machine. This is done through depreciation and amortization deductions, which allow the taxpayer to deduct a portion of the cost of an asset each year. Yeah, the money's coming out of your pocket all today, but the IRS doesn't care. They are going to have you do depreciation. Depreciation is the cost recovery method used for tangible assets, such as building machinery and equipment. It's going to allow the taxpayer to recover the cost of the asset over its useful life. Useful life is determined by the IRS and can vary depending on the type of the asset. We're going to see various tables, charts. You have to memorize which useful lives go to which assets. We'll see that. Amortization is the cost recovery method used for intangible assets, such as patents, copyrights, and trademarks. Like depreciation, it allows the taxpayer to recover the cost of the asset over its useful life. Useful life is determined by the IRS and can vary depending on the type of the asset. We're just incredibly excited to get into this. We got a little bit more of an intro. Just want to make sure we have a nice understanding of everything we'll see. The amount of the deduction for each year, it's calculated using a depreciation or amortization schedule, which takes into account the cost of the asset, its useful life, and any salvage value at the end of its useful life. Here, we're using MACRS, the modified accrual system. This is used by the IRS, used for tax purposes, whereas for financial accounting, we use straight line, and then maybe double declining, and then maybe those other ones that we never really see on the exam, but sum of digits, and that's something I can't say I've heard on the exam in years, but anyway, moving on back to our exam currently. MACRS is utilized by taxpayers through the IRS. It ignores salvage value when computing MACRS depreciation. The concept here is also important because it allows businesses and individuals to reduce their taxable income by deducting the cost of assets over time. This obviously, as you can imagine, will result in significant tax savings, especially for businesses that invest heavily in tangible and intangible assets. Now, it is worth noting that cost recovery is not available for all assets. For example, land is not depreciable. This is not unique to tax. This is just how it works for financial accounting as well, because it does not have a limited useful life. Additionally, certain assets may be subject to special rules or limitations, such as luxury automobiles. Not that we're going to cover that on the exam. Again, this is a nice intro, kind of just talking you through it all, which are subject to depreciation limits under the tax code. We will see Section 179 depreciation. We're going to see different types of depreciation and everything you need to know for the exam. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.